So hello and good morning. Hello and good morning from the European Crowdfunding Network to the second day of the 9th European Crowdfunding Convention. We had a nice discussion yesterday on crowdfunding in general and the market development. We want to focus today on crypto assets and MiCA. And I'm very glad that we have a very exciting panel with Michael Huertas from Dentons, whom I will introduce in a second, Hagen Weiss from the German Ministry of Finance, Nathan Kaiser from Six Digital, Greta Gaumert from Exporo, and Ivona Skultetyova from ECN. Crowdfunding and crypto assets first were discussed together in the European Parliament when the European crowdfunding regulation, now ECSP, which we will discuss tomorrow, was kind of framed, and the European Parliament wanted to include crypto assets in that regulation, but it was taken out in further discussions. And we now have a proposal from the Commission very specifically on crypto assets, and that should be our topic today. And we want to find out if it is useful to crowdfunding, if it might be a way forward for some activities later on. So I would like to invite Michael Huertas into the call now and then give a short introduction, and then you lead with Ivona into the discussion later on. Thank you very much, Michael. The floor is yours.
Thank you, Oliver. Good morning from Frankfurt. My name is Michael Huertas. I'm a partner with Dentons and the co-head of the European Financial Institutions Regulatory Practice. On behalf of Dentons, the world's largest and most awarded law firm, I'm delighted to welcome you to day 2 of the ECN 9th Crowdfunding Convention. Undoubtedly, crypto assets have now truly come of age. Coming out of the corner of financial markets, they've cemented themselves center stage for policymakers and market participants, both large and small. Throughout history, the nature of regulation of financial transactions, new technology, and new market participants has evolved in response to socio-economic changes or changes in market practice. The platformification, difficult word, apologies, of financial services, including through big tech, as well as the emergence of unregulated actors and volatile prices in crypto assets, have pushed policymakers to take a closer look. To date, however, the regulation of crypto assets and those transacting in them has been fragmented along national lines. Decentralized finance certainly does not do well when faced with fragmentation of rules. It also does not do well when faced with competing supervisory expectations by multiple policymakers and supervisors. Fragmentation drives uncertainty, costs, and is fundamentally counterproductive to the EU's efforts to complete the single market generally, as well as for financial services more specifically. And we'll come to that later on today, how MiCA changes some of that. However, when viewed through the lens of regulatory policymakers and supervisors, crypto assets brings new opportunities, but it also poses new risks. Crypto assets also bring new pressures on how to regulate, if at all. Policymakers have been faced with the conundrum of whether to extend and adapt existing rules to crypto, or whether to draft completely new rules for crypto as a new asset class, and firms engage in activity that will then become regulated. Not all policymakers have to date taken the same route, whether to regulate, and if yes, how? And if they do tie these new rules to crypto, how do they exist with existing rules? How does this coexist, crypto and non-crypto? Unsurprisingly, global, EU, Euro area, national regulatory and supervisory policymakers have had differing views. The key challenge is that the majority of underlying principles that stand to the core of financial services regulation certainly predate technological advances in financial markets. Most of them also even predate electronification of markets, and some go even much further back than that. Much of the rules that we come to rely on in financial markets and how market participants interact with one another are also based on trust and a centralized system and governance of different market actors in much of a different way than how the crypto environment operates. That places pressures for financial services regulatory policymaking, as well as financial stability oversight. So this fragmentation, in as much as it's frustrating for firms who are unsure how to comply, also drives an unlevel playing field. And again, this is something which is not of interest to the market. So consensus on putting in place a new and comprehensive regime was long overdue. And the European Union has now put that consensus into practice in the form of a legislative proposal, the Markets and Crypto Assets Regulation. Some market participants, rightly or wrongly, may, however, be less enthusiastic about regulation in crypto and consider that regulation certainly is unnecessary and perhaps overly burdensome. I hope by the end of today's presentation, you'll agree with me that it is necessary and poses more of an opportunity rather than a threat. I'm delighted that on today's panel, we're joined by supervisory policymakers and market participants who are at the forefront of this debate. And before we move on to that debate in full about markets and crypto assets, I'd love to hand over to Ivona to introduce the rest of the panel. So many thanks for your time so far.
Thank you very much, Michael, for your insightful overview of the crypto market and the problems and opportunities that we experience there. My name is Ivona Skultetyova, and I'm a senior researcher and project manager at European Crowdfunding Network. And today I will be your host and moderator. Before we delve into content discussion, I would like to I would like our panelists to introduce themselves one by one, and also to tell you what their connection to the today's theme exactly is. Maybe we can start with Hagen.
Yeah, thank you so much, Ivona. Hagen Weiss. I'm a senior advisor at the German Federal Ministry of Finance, and basically in charge of creating a new regulatory environment for crypto assets there. And before that, I worked at the German regulator, BaFin. And even before that, I had the pleasure of being a litigator in private practice as a lawyer. And I specialized even there back then in crypto assets. Thank you.
Thank you. Nathan?
Hi, everyone. So my name is Nathan Kaiser. I'm the General Counsel of SDX, which is a part of the SIX Group. We're aiming to be the first regulated securities exchange or tokenized securities exchange in the world. And I've been in, I always say, I've been in Bitcoin since it was $5 and haven't left yet. So I'm very happy to be here. Thank you, everyone.
Thank you. Greta?
Hello, good morning. I'm Greta Gaumert. I am the General Counsel and Chief Compliance Officer at Exporo. Exporo is issuing tokenized bonds for real estate investments that are based on the blockchain. And yeah, before that, I worked in the financial industry. However, only this year I came to the blockchain business, crypto asset business, and I'm excited to be here, part of this panel.
Thank you. And Michael, maybe you can tell or reintroduce yourself and tell us more about yourself.
Sure. So again, hi everyone. Michael Huertas. I'm a partner and the co-head of Financial Institutions Regulatory at Dentons, sitting in Frankfurt. Currently in my home office. Obviously, I look at crypto assets, and specifically MiCA is a new regulation, as well as DORA, which is the Digital Operation Resilience Act, which I think we'll also come on to later today. And delighted to be on a great panel.
Thank you so much for all the panelists, and welcome again. Before we delve into specificities of MiCA, which is quite a comprehensive regulation, as Michael already mentioned in the keynote, I would like to take a step back and maybe look at the bigger picture also for our attendees and our participants in this webinar. So in your view, and you have very different angles that you approach crypto asset markets from, in your view, what is really the added value or the novelty that crypto assets bring in the context of finance? Please feel free to jump in and grab the question.
Well, maybe I can start from an industry perspective, or yes, because we started actually offering crowdfunding investments classically through subordinated loans, and then we started offering securities in form of classical bonds. And at a certain stage, about 1.5 years ago, we decided to go to the new, to the new era, so to say, and to issue tokenized bonds on the Ethereum blockchain, basically using the Ethereum blockchain as an all-in-one platform for the issuing and trading of tokenized bonds. And why we think this is such an important step, whether now it's MiCA or it's a financial instrument, is that the delivery time is faster, trading is faster, easier. We have less intermediaries. We have less custody costs. I mean, of course, the costs are now increasing, but still we see a lot of efficiency. And that's why we thought it's such an interesting and important step that we would need to take.
Nathan, you wanted to comment?
No, happy to. Right. I think it's a big question. It's not a small question, and I can tell you that at SDX we ask that question every day, and I think we in that space we need to keep asking that question, and we usually do fall back on the very classic faster, cheaper, better, and on one hand, and then on the other hand, or on a second layer, we think that faster, cheaper, better then actually enables business models and operations that were just not possible with the current structure. So that sounds very vague, but that's how conceptually we see it. And I think one approach is that you have to build the faster, cheaper, better first and build it out, and that's an infrastructure problem. And the regulatory environment is part of the infrastructure problem. And once that infrastructure is in place, the private industry will pick up that ball. I'm highly convinced of that, or at SDX, we're very convinced of that. It's a bit similar to the very large capacities that were built up on the internet with the undersea cables that were then only afterwards quickly filled with video, which nobody had anticipated. That's kind of how we see it. Yeah.
Maybe I can add something from a regulatory perspective. And honestly, I couldn't agree more with what Greta and Nathan have already said, because faster, cheaper, better is definitely true. And what crypto assets do is they add a certain level of tradability. In a way, it even led to a situation in which that technology, the underlying technology, DLT, almost obliterated certain national statutes in Germany, the law on financial investments, Vermögensanlagengesetz, because we followed from a regulatory perspective what MiFID said. And MiFID set out a, let's say, technology neutral requirement, and we followed that, and that led to certain, let's say, ramifications. So definitely faster, cheaper, and maybe even better.
For sure. So do you think maybe that the novelty is not only the faster, cheaper, better, as you say, the building an infrastructure that facilitates tradability more than it was before, but also that in terms of the content of the assets, we can be more creative in what rights and obligations the assets can carry. Because we all know if we have financial instruments, we have very settled idea of what financial instruments are and what rights they carry and how they engage their holders. So could the novelty maybe reside also in creativity in design? What do you think about that?
Maybe up to a certain extent that's definitely true. That brings us right to the scope of MiCA, or the proposed scope of MiCA, because as of right now, the wording is quite broad. So we could definitely think about flexibility. We could think about innovative approaches. And that's exactly where the value lies for the crowdfunding industry, because you technically have more flexibility. And added on that is the fact that the EU Commission put a lot of effort into the fact that they wanted to have a proportional framework. They wanted to have a framework that doesn't put a huge burden on market participants. It's going to be, in a way, maybe burdensome, but financial regulation always is. And that's exactly the reason why you need to have an ongoing exchange of thoughts. That's why you need to have people advising you, guiding you through the regulatory maze, so to speak. But yeah, that is definitely something that we look forward to when it comes to innovation and flexibility.
Maybe I can take the an example that has been around for a while, which is the tokenization of cattle. And it's just, I'm just picking one. We could take tokenization of trees or cherry tomatoes or so. And I think arguably, because you're asking for design, is there a new design possible? And I think there's two ways of looking at it. One way you could say, well, it was always possible to tokenize cattle or cherry tomatoes. It was just very hard to do or inefficient to do. Hence, it was not done. And with what we're all trying to build here, it will be easier to do and hence possible and economical to do. So is it new design or not? It sort of is both. No, it's new design, but in theory, it's not really new. So I don't know. It's in the eye of the beholder, maybe.
Mm-hmm. That's very interesting. So the technology was similar to internet, something that facilitated the concepts that we already had before. So that's indeed true. Where do you think that the current crypto market stands in terms of value, volume, and in terms of capacity to maybe disrupt or influence the traditional financial markets? Maybe that's good to compare, to put it in perspective. Where do you think that market stands right now? There's obviously a lot of discussions going on. There is a lot of regulation coming up. But where do we stand as of now?
Well, I might jump on that if I may, and then give Hagen a bit of a break as the policymaker. But I think regulation is certainly not something, as I alluded to beforehand, that should be seen as a threat. So if we are looking at cheaper, better, faster, we're also looking at safer, and regulation is supposed to provide that. We do have, of course, the problem that there have been a lot of bad actors in crypto, and that's normal in any market, both regulated but also unregulated. At the moment, you have something which is new with a lot of volatility and a lot of quick money that can be made. It's similar to the Wild West in the United States. It's the new frontier, right? So there's a lot of opportunity. And regulation is supposed to make that safer for all of us. And I think the moment we're facing now really is definitive. It is a game changer that Europe is pushing ahead, and notably on the efforts of the German policymakers who've been the brainchild for what it has been a quite sharp move in terms of the debate on crypto asset regulation. So I think it's very exciting. It's never probably been there's never been a better moment to be involved in crypto than now. And I think also to Nathan, and the regime in Switzerland, of course, is moving along in its own way. We have then the problem that you need global interaction to keep the momentum moving. So the regimes also need to be interoperable with one another. And that's where maybe, Hagen, I'm not sure whether you have some views on interstate cooperation, but certainly something we look forward to in the market.
Thank you. Definitely. But maybe Nathan, would you like to go ahead?
No, but indeed we do have views of interstate cooperation, and we're actually looking, let's say from a very Swiss perspective, Michael, what you just said is very true. Now we're looking at the EU, and then in our own internal presentations, where it's put in 2024, which is sort of when it will all happen in the EU, and we think, oh my God, that's such a long time. No, can you go faster? Yeah. But maybe Hagen, what's your thoughts on the speed?
Thank you, Nathan. Yeah, well, I'm a big fan of speed, but it also needs to be combined with a certain element of diligence, obviously. And coming back to the actual question, yes, cooperation is key. Cooperation actually can be a game changer. And then, Ivona, because you asked that question, the crypto markets are still relatively small compared to the traditional financial markets or capital markets. And interestingly enough, MiCA technically doesn't deal with financial instruments, but the EU Commission published a very comprehensive proposal, a very comprehensive framework. And for instance, they have this like pilot regime that explicitly deals with financial instruments. So if you look at MiCA, for instance, and the other connected proposals, we see that it's very comprehensive, and it might push the crypto markets closer to that threshold that we all would like to see. And add to that the fact that we are already seeing articles, economic articles, legal articles that deal with analyzing the crypto markets from a systemic perspective. And when it comes to MiCA, we're looking at significant ARTs, asset reference tokens, and EMTs, e-money tokens. And MiCA specifically distinguishes between quote unquote normal EMTs and ARTs and the significant ones. And significant could translate as systemic, and that could translate as threshold reached.
So do you maybe think that there would be interpretation problems, or whether some sort of asset falls, first of all, under the financial regulation as a financial instrument, as a tokenized financial instrument, or under MiCA? And then furthermore, also interpretation differences, whether some token falls into different categories within MiCA. So do you think that can happen? Will there, because as we mentioned during the beginning of the panel, tokens are designed in very creative ways sometimes. So they sometimes walk a very thin line into whether they are financial assets or not. And Michael, for instance, you are also a regulatory expert.
Yeah, I mean, I think, look, tokens can change over time. Sometimes they're securities, sometimes they're sort of financial instruments, sometimes they're not. What MiCA does very elegantly, and I think this is the big breakthrough, is to say, if you are a financial instrument, if the token is a financial instrument, then the whole scope of regulation will apply under the existing financial services regime. So that's the step that Germany had already taken with its own efforts. That's the step that most other jurisdictions around the world are taking. So to say, clear line, if it looks like a financial instrument, then it will be regulated like a financial instrument. All the activity that goes with that will also be regulated under existing financial services law. And that already is quite crucial because it gives certainty. MiCA comes as this big, long piece of legislation, very detailed, but as Hagen also mentioned, quite broad in its scope and deliberately broad in its scope, and regulates everything else. And whilst MiCA borrows from existing principles in financial services regulation, it says if you are a utility token, or you're a payment token, or you're a e-money token, or you're a stable coin, effectively an asset reference token, then you fall under MiCA. And this is a new regime. But one of the things that we have to be quite clear about is that this new regime, which is going through the legislative process, we anticipate that it will be adopted possibly by late 2021 or mid 2022, and then come fully online and operational by 2024, which at that point we will already have had the crowdfunding service provider regulation online for 2 years. This creates, and I want to be unequivocally clear about this, this is one of the biggest opportunities for Europe and for investors, for firms, for SMEs, anyone looking for finance, because suddenly you have two regimes that coexist, that open up a new asset class, that open up a whole new area of raising finance, and it does it in the biggest, the biggest single market in the world. I mean, that's quite exciting. And maybe I'm being a bit too optimistic on that, but it certainly is a game changer. So that's really where we are with that.
Maybe I can step in here, Michael. I agree fully to what you say, and this is also what we are seeing and what we are aiming at a European market, and attracting European investors and not just focusing on one country. And just to give you an example, we have already about 9,000 of our platform users that have done 26,000 investments in security token or in bonds, in tokenized bonds that are issued on the blockchain. And the volume of that is approximately 90 million euro. So although this is not a MiCA instrument, of course, because MiCA is not live yet and it's a financial instrument, but what we saw is that the German legislator really allowed the issuance of tokenized financial instruments at a very early stage. And I think this was a great move because it gave us the opportunity to use this new technique in a regulated way and give also, and by this way, some comfort to the investors. And I think looking at MiCA and saying, okay, we have once the financial instruments, and I think in Germany right now, the perception of tokenized assets is more that they are financial instruments because that's what we know. But coming up then MiCA, bringing basically something new, I think it would help to kind of align it with what we already have now, because sometimes for the smaller market participants, it might be quite difficult to adapt to so many different rules and regulations. So I think we should learn from what we already have and then make use of it and then try to have a harmonized regulation in Europe, because I think that's really what will bring all of us forward and help us to be a strong market.
That's very interesting, Greta, what you said, because it sort of delineates that there is a different approach of German regulator who initially subsumed most of the crypto assets under financial regulation with some caveats and differences. And then we saw that MiCA effectively created a new asset class that is outside of financial regulation. What do you think about that approach? And do you think it is really the reason is to allow newly entered market participants that may be quite small companies to operate under lighter regime? Is that what motivated sort of the emergence of that new asset class that we've seen in MiCA? What do you think about that? Nathan, for instance.
Yeah, it's another one. It's another one of these hard questions, and there's probably, I think that can be probably really be hotly debated. I understand the question a little bit, as in excuse me, I need to take a step back. Maybe the question could be understood as, is MiCA trying to enable something like a securities token or tokenized securities, but with lower thresholds? Is it a way to sort of circumvent the current investor protection and restrictions? And if it is this that's trying to be achieved, then I think it would be the wrong thing to do. And that's maybe also back then to Hagen, who unfortunately had to leave, I think. But I think the investor, that's my personal opinion, investor restrictions and investor protections are there for reasons. And sometimes in the, maybe what you can call the crypto space, there is this idea that we have these senseless restrictions and senseless laws, and that prevent people from doing things. Well, maybe, again, in my personal opinion, it's maybe that the laws are somewhat outdated, and that some of the thresholds and amounts can be adapted and amended and be maybe refined and so on. But I don't think we should take MiCA and tokenization and blockchain and DLT as a technical justification to undo restrictions that are there for a reason. But I'm going to throw that into the panel. Happy to debate. Yeah.
Definitely. Maybe just real quick, I'd like to add that regulation is there for a reason. And it needs to foster innovation on the one hand, but on the other hand, it should protect the investors and even the market participants. So it definitely, and MiCA already starts or almost starts with mentioning that, because it also mentions in recital 2 that fundraising needs to be streamlined, but there needs to be, some kind of trade-off. And that's what we've been engaging, by the way, for the last, let's say, 2 months as the German presidency. We've been engaging in some kind of stock-taking exercise, meaning we talk to the Commission, we talk to individual and respective member states, and try to establish majority positions so we can actually move forward when it comes to MiCA in a way that fosters both market participants, fosters investor protection, and at the same time, hopefully, quite hopefully, innovation as well.
Yeah, I mean, just to jump in on that, obviously, regulators don't make rules for the sake of making rules. I appreciate not everyone may agree with that, but certainly what MiCA does, again, just to recap, for those that are maybe not as familiar with the regime, it first of all really delineates whether it's a financial instrument or not a financial instrument. It defines a set of activity that will be regulated, that can only be provided by crypto asset service providers that are established in the EU. So again, you can debate whether that makes sense from supporting the industry. From a regulatory perspective or a policymaking perspective, it makes sense that you have to be in the European Union to be supervised by a European Union authority. It also puts in place quite prescriptive, but also, if you want, the trade-off of being prescriptive is that you have guideposts or guidelines as to the content and approval of white papers. So we actually for once have a standardized Europe-wide set of rules that say this is what a white paper needs to contain. And I think that really is the point that has been long debated by European authorities, European Union authorities, national competent authorities, since crypto really came to the forefront in the sort of ICO 1.0 developments. So putting that effectively, on statute, on the black letter of the law, is quite helpful, right, for issuers as well as for investors. Then there are other bits which are perhaps you could argue are maybe not so helpful, that we have a minimum capital requirements regime for crypto asset service providers. Again, once you look at that, it's stomachable. It can be managed as long as you're preparing early for it. The same thing with the conduct of business rules and organizational requirements that firms need to put in place. Again, the earlier one starts now with 2024 on the horizon, or effectively 2022, and then the next leap to 2024 on the horizon. If one starts earlier, then of course one can get prepared for that. And some of the principles are actually, they've been around for quite some time as well. The other welcome development, and I think this really is testimony to the German presidency of the European Union, is the moves and the rules in crypto custody and segregation, which really has been sort of a complete development to say, let's create a safe space for crypto custody. Let's also put in place the same segregation requirements that have existed in traditional financial services. The extension of market integrity rules to prevent market abuse, insider information, that has already long been there. That's just really putting it all in one place in law. And again, other jurisdictions will do the same, Switzerland, the UK, and so on. And then, you have, I think, fundamentally, two real other game changers. One is that MiCA really puts in place definitive rules for the relationship between the crypto asset issuer and the token holder, as well as rights and procedures for a token holder to complain. And previously, that part of law was exceptionally complicated, depending on where the token holder sits, depending on the law of the token, which is usually a question mark. I mean, it effectively is providing legal certainty, which again reduces cost, which is of course welcome for the market. And then the last bit of regulation that MiCA brings in is the pilot regime for DLT market infrastructure. And that I cannot state how important that is to create effectively the world's largest sandbox regime for private sector participants to create, develop infrastructure for trading and settlement of crypto assets. Because if you can't create a safe space in which to test the infrastructure of the future, we're never going to get there in the way that we would want to support communities, clients, and effectively, as part of Capital Markets Union, the European Union, finish the single market, which is a work in progress and long overdue. So there's a lot in these new rules. There's a lot that MiCA doesn't do, and we can probably get onto that in a moment. But that's certainly, if you want, my cheerleading for this new crypto asset regulation.
Thank you, Michael. And so another very important fact about MiCA, or very important observation from the commentators in the industry, is that it focuses quite a lot on what the crypto industry calls stable coins. So the tokens that whose value is pegged or referenced to either fiat currency or multiple fiat currencies or multiple cryptocurrencies as such. So do you think, what do you think is the motivation behind that focus? Because let's be honest, 2 out of 3 definitions that are about related to tokens that are in MiCA are actually related to or refer to these stable coins, different types of stable coins. So how do you justify that, or how do you think about that that strong connection to stable coins that MiCA seems to show? Nathan.
I almost don't want to go on this one first. I'll pass this one on to somewhere else if you yeah. Thanks, Ivona.
Then Hagen, yes, please.
Monetary sovereignty. Thank you, Nathan, by the way. What's not going to happen is that we have private companies take away government jobs, government duties in a way. And obviously we're talking, when it comes to MiCA, about addressing the elephant in the room, which is a certain stable coin that's been making headlines for the last almost like 2 years, right? So we're going to protect the industry, be obviously consumers and investors, but at the same time, it's gonna be proportional. So what we want to do is we would like to create a safe environment for stablecoin issuers. That means you are not going to be pushed out of the market. We're not going to crush you or anything, obviously not. But we need to have rules that are established that apply to just about everybody and anybody. And there's no malicious reason for creating strict rules. The German philosopher Nietzsche once said, the government is the coldest of all monsters. But rest assured, the EU Commission, the German presidency, and the German government have nothing but benevolent intentions when it comes to safeguarding the market and consumers. So yes, it definitely plays an important role when it comes to stablecoins and MiCA, but we also want to create a comprehensive regime.
Yeah, but Hagen, I think, jumping over the Atlantic, where a certain private company with its stablecoin ambitions sits, the flip side to your statement would be Ronald Reagan's famous quote, "I'm from the government, I'm here to help," which may cause some concern. Just playing at devil's advocate for a moment, stablecoins serve a purpose for developmental needs. That would be the argument, helping the underbanked. I'd appreciate sort of your views to, you touched upon creating a safe space for stablecoin issuers. Would you agree to say that the rules that apply to stablecoin issuers, they're not that bad if you really look at them? It's not the unachievable?
Well, it really depends on the circumstances. We definitely took note. what happened on the other side of the Atlantic, what's been happening since Reagan took office, obviously, quite a few decades ago. And he was obviously a proponent of small government, and that's exactly not what's going to happen here. We are also here to help the market and participants and investors. But yeah, we can also see the difficulties that are associated with that. Again, we do not try to push anybody out. We actually encourage participation. We encourage an ongoing exchange of thoughts. And yes, stablecoins are there for a reason. And that's exactly why we want to utilize the potential for innovation. We just want to make sure that at the same time, the government is there in its sphere to deliver the responsibilities that it has.
Maybe if I can jump in here, and I really love the discussion. There's obviously also a risk of adverse selection, that because of regulation, only the big boys and girls will be able to issue a stable coin, which is then exactly kind of maybe not what the benevolent EU regulator wanted to, is one piece, and that can be discussed. And then another piece is also that probably we all need to stay humble and say openly that this is not the last answer. No, we'll have to let this run for a while, and then some of the consequences cannot be foreseen, even with all the preparatory work and thinking that has gone into it or into MiCA. And then maybe we'll have to redirect course. Hagen, I don't know how you see that.
Point taken. Point taken. What's not going to happen is we're going to like snuff out smaller companies and then just allow the bigger companies, because let's call it big boy rules, just the opportunity to gobble up a huge share of the market. Not going to happen. We try to streamline everything, and yeah, we definitely are going to take that into consideration. And unfortunately, due to a previous engagement, I have to leave it here and gotta jump to the next meeting. Thank you so much.
Thank you very much, Hagen, for your contribution, and good luck.
Thank you.
Maybe I will touch upon the point that you discussed already during the previous question, and that's that MiCA seems to benefit certain established incumbent players, especially also in the financial industry, not only the ones that are very much successful businesses in the area of stablecoins and potential future stablecoins. So at the same time, MiCA purports that it will foster innovation and sort of create a level playing field. So what do you think about that? Is MiCA sufficiently benevolent to the players that just are emerging or just entered the market, blockchain startups and so on and so forth?
I might take that, but I think Greta probably wants to jump in on that as well. She might have a different view on how benevolent the regime is, but yes, you're absolutely right. MiCA introduces the concept that if you are providing crypto asset services, so a set of regulated activity, 20 thereabouts, then you need to apply for authorization. And that's a traditional financial services authorization process. If you are already a financial services regulated firm in the European Union, then effectively under MiCA, you can top up your permissions. So you are regulated, let's keep it in the financial instrument space, as a MiFID firm. You want to provide MiCA services, you top up your authorization to get MiCA services, and then for the MiCA activity, you sit under some of the aspects of MiCA, and you also sit under MiFID. So there is a speed element that will apply. But that's not unfamiliar for financial services rulemaking, because we have exactly the same thing in the European crowdfunding services regulation directive, with the ability to continue if you are regulated in the national law for a certain period of time before switching over to the European regime. So there is the advantage, but if you prepare earlier, then you might actually be faster as well, right? So there's the opportunity to be ahead of the game. Greta, your views?
Yes, Michael, I agree with you totally. First of all, I think that even if you are a startup and a small company and you want to do your business in the financial sector, you have to accept that you are regulated. And I also think that regulation is important because it's such an important field, and especially if you're dealing also with, it doesn't matter if you're dealing with retail investors or professional investors, you need to make sure it's other people's money, so you have to protect it, and that's why regulation is good. We decided actually in end of 2017 to apply for the MiFID license, and we have now a banking, according to the German Banking Act, a license. And I have to say that, of course, it puts burdens, especially on small companies, because it means you need to have departments which you maybe didn't need to have before, like a risk department, compliance department, audit, whatever, you name it. And of course, those departments primarily cause costs. But on the other hand, they also bring quality into the services you offer. So in the end, it's good. But first, it means an investment. And small companies sometimes don't have the money. But I think it's more and more, it becomes clearer that this is what is needed if you are doing business in the financial sector. And having said that, I think it's important that if you have a license and a regime that is already in place, and that was my previous point, like MiFID, and you have companies holding this MiFID license, of course it helps if new licenses for new financial services that are coming up, which is great, that they basically see what they can take from those licenses, that you don't have to start from scratch, but that you can use the work you've done in the past, use the experience also from the regulators from the past, what has helped, what do I need to see for issuing the license, and try to, well, make it as smooth and comparable as possible. And exactly that's what we are seeing with the ECSP, as Michael mentioned. And I think it would be good if also there MiCA is in the direction of MiFID, because it makes it easier for smaller players to apply for this license. And just to finish off, I think, but what is really important, and that's what all those regulations are aiming for, is European harmonization. And I think this is really what will bring all of us forward. Nathan, I think you wanted to add something.
No, no, not at all. I mean, because I feel like we are more one of these highly regulated entities as a financial market infrastructure provider. So in an odd way, we're kind of a mix between the incumbent and the new ones, and it's an odd mix. We're happy to have the backing of SIX, which is helpful. But I did find, Greta, it interesting, because you're probably in that sort of like maybe in a sweet spot, because you know the regulation, you've gone through MiFID, and you're now small enough in a good way, so you can jump on the next regulation, and because you can handle it, and you're also small enough to be, in German you say flink, you're fast enough to react. And then maybe that is a sweet spot, and very big players are internally too slow to catch on, and smaller players will not have the advantages that you have. Yeah, I think it's a space to keep watching. I think will be very interesting. Yeah, and then it will probably land on Michael's desk, I assume. No.
Well, we're very grateful for any questions that come across. But I think Nathan, you hit the point on the nail on the head. Really, agility is key, and one of the things, at risk of breaking the consensus that MiCA is a great thing, again, to play devil's advocate, Switzerland, of course, is certainly more agile in its rulemaking, and sometimes more elegant in its rulemaking by taking EU concepts and putting a Swiss finish on it. From our understanding, the Swiss DLT blockchain regime is going to be probably in force a lot faster than MiCA. So from your perspective as leading provider in Switzerland, indeed globally. Do you see that as a competitive advantage, or is it, it's great to have that, but it still also needs to interoperate with the other regimes?
Clearly the second one, absolutely clearly the second one. So it's great to have that, and there's lots of people building lots of things in Switzerland, and that's all fantastic. But if Switzerland is an island, then that's actually largely useless. I would go as far as saying that. So no, we as a company, or even Switzerland as a jurisdiction, we are dependent on the fact that other jurisdictions also move forward. So it's not an island. Yeah, it doesn't work as an island. Yeah.
Maybe that's really good bridge to next question. So, Michael, I think in one of your answers you mentioned that one of the biggest advantages of MiCA is the passporting regime, meaning that if you become a CASP or a crypto asset service provider, or if you issue tokens in one member state, then you can do the same across the European Union. So, do you think that this is something that will this is a contribution of European Union to regulatory competition, so we will be attracting more businesses, or on the other hand, it may deter businesses from coming to Europe because of a necessity to comply with rather extensive regulation that MiCA is. What do you think will be reaction of the market?
Well, I mean, yeah, it's a question that is debated highly. I think there will be those that will see it as an opportunity, as Greta has already mentioned, the ability to raise capital across borders to ensure that tokens can travel far better than they already do in such a good way. That, of course, is quite welcome. There are going to be those that will say, I'm happy to remain in my jurisdiction that has, or continue my tokenization efforts in a jurisdiction that is not as fully regulated as you have in Europe or in Switzerland or in the UK that's coming. But I would say to those persons, it's a shame we don't have Hagen as the benevolent regulator to say it's not a question of if, it's a question of when regulation is coming. And this is something that we constantly see this debate around, on stages like this in home offices, but also more the traditional convention stage around the coffee tables at various different conferences, to say, I have this wall of regulation that's coming. But the moment you start to think about the cost of compliance as how can you monetize that? How can you actually go out and say, my competitive advantage is that I am supervised, I am safe, I am not going to be a bad actor, right? Those tokens that fall under that regime could possibly even have a premium, right? They could. There is a trust in a system that, yes, is decentralized and has trustless aspects in it, but you're putting a safe space in which to effectively generate capital and returns in a much more sustainable manner. So I think that's the advantage. The passport is, one of the most fundamental, important parts that the European Union has created. It is unequivocally one of the absolute benefits of the single market. It's something that we've talked about islands, so I'm going to avoid the B word, but the island in front of the door to Europe may have its own regime, but again, I think as Nathan has said, you can't in this new reality operate without Europe and the 600 million plus citizens that are potentially investors. So it's an incredible opportunity.
I can only agree to that. And also there again, the passport, we see the parallel to the ECSP, the European Crowdfunding Service Provider Directive, where they also have this passporting regime in there. And so I think it's great to see that there are more steps taken towards this European harmonization. And we really appreciate that and look forward to that. The only thing that is now still missing from our perspective, just as a side note, is the tax regimes, because sometimes it's not so easy if you have an issuer in a certain country issuing, let's say, financial instruments or whatever, and then it's taxed different in the different member states. That really still makes it sometimes quite complicated. But that's not the topic here. It's just a side note. Yeah.
But I think it's an important one where certainly, people have different views on tax. I have a ultimate respect for tax. There is tax harmonization across Europe is also the big barrier in traditional financial services, in crowdfunding, in crypto. And maybe that is something where, and I appreciate we're not tax experts here, but maybe that is something where one can learn from Switzerland that's been quite good at looking at tax in crypto and allowing you to even pay your tax in crypto, which is quite innovative. So just a thought there.
Maybe an interesting part of MiCA is also that it legitimizes crypto asset service providers, as we mentioned already, because there was a lot of potential for fraud in operations of these crypto asset service providers that were previously unregulated in many jurisdictions. So do you think that the regime that currently MiCA proposes is sufficient to really sort of sort out the bad apples from the good apples on the market and make sure that different types of market abuse don't happen, or that the assets of, for instance, in terms of crypto assets of customers in terms of crypto custodians are safe? Do you think that the MiCA is strict enough or sufficient in that sense?
Maybe I think one piece, so we mentioned taxes, and I do actually a little bit of taxes. I'm always interested in taxes, and I think that's a very good point raised by you, Greta. But I think another piece that's missing, to answer your question, Ivona, is the auditors, and I think the auditors will play a very important role, and they will put their stamp on some things and not on other things, and obviously with the wildcard story that has been shown again, but this is gonna stay with us, So I think you can't just look at the regulations and the regulated entities, but we'll also have to look on how the auditors deal with that. And maybe question back to Greta and Michael, I don't know what your experience is with regard to auditors and their role that they'll have to play or will want to play in the crypto space.
I mean, they sure, it's a constant learning process, right? I mean, for everybody in the industry, it's something new that's coming up. And I think also for the auditors, they will really need to dig into it, like also the regulators, like BaFin, like the legislation, like the legislators. So everybody that is dealing in this industry is making the rules, but also ensuring that the rules are observed. They need to have the industry know-how, and they need to understand in depth how this new technology is working. And I mean, I see it here in our business. We of course we have all the tech people who are doing all the, who are developing the platform from a tech perspective, but they all really know also about regulation, and they know what does it mean, because in the end, in this tech solution you offer, when an investor clicks and says, okay, I click to invest, in the back there is all these rules and regulations, compliant processes need to be observed. So I think really it's everybody has to think further. The ones that only looked at the regulation, like lawyers, auditors, they need to get a tech understanding, and the tech people, they need to get a regulatory understanding. So we really have to open up our minds.
I think regulation is certainly always a journey, and it always is a partnership with various different skill sets to make effective supervision. Certainly in Europe, European Union, we've seen a increased Europeanization of financial services rulemaking as well as supervision. That leads to, if you want, a single supervisory culture that is supposed to underpin the single rule book, that is supposed to help the single market. And that single rule book keeps growing. MiCA is the newest chapter to it, where I think, Greta, you make the point very eloquently that regulators themselves also are moving to this regime. It's not like they've said, here's the law and good luck, right? They also have to step up their staffing, their resources and knowledge effectively to have a better understanding of what happens when the investor clicks to invest, right? How do protocols operate with one another? How does an API work? And I think you have across the European Union, you have pockets of expertise. Certain regulators are better than others because they have more crypto firms in their jurisdiction. So they may provide centers of excellence or centers of expertise for the European system of financial supervision. One thing, and I might be now a bit too pessimistic at the risk of breaking the consensus on the panel, that I don't think regulators in the crypto space are going to be poring over code in the first couple of years. They're not going to be moving towards that. Where their focus will be is more on digital operational resilience, which we can't forget that MiCA is one part of a package of legislative reforms as part of the digital finance strategy. And digital operational resilience, ensuring that a firm's tech can withstand internal and external threats. That's easy to police because that's existing knowledge that can be supervised. You start with that first and you build over time, you build the technical aspects to it. But yeah, it's a transition for them as well. So.
Thank you, Michael. Also, the name of today's session is to think a little bit, what are the opportunities of MiCA for the current crowdfunding industry? Can MiCA mean that current crowdfunding players can expand their business models or expand their businesses and add crypto tokens to the portfolio of the assets? Or do you see this as two separate industries that are focused on different types of companies or are designed for different types of stakeholders? And I will bounce this question to Greta because I think Exporo has a very personal experience with stepping over to blockchain.
Yes, thanks, Ivona. So as I mentioned already in the beginning, we have already issued tokenized bonds, but of course that are financial instruments. But what did we have to do for it? We had to establish, as I mentioned, a platform, a technical solution that is backed by, or that complies with all the laws and regulations applicable to financial instruments. So from that perspective, I would think that we have already done quite a step forward, so it wouldn't be so difficult to offer other tokenized instruments. And even if it's not a financial instrument, but if it's a MiCA regulated instrument, I would assume that this is not the biggest steps. The biggest step we've done already in the past. So therefore, I would think, although now I'm also thinking very much in financial instruments, that we are totally open and we will very closely monitor the developments and see if we can use the MiCA regime for future possibilities for investments. And maybe even we can, what is our aim is to make illiquid assets liquid and tradable and accessible for retail investors, because we have a negative interest environment, and I don't think it will change in the near future. So it's really important for everybody to see where they can invest. And I think giving opportunities to invest in different assets is a great chance, and therefore we will for sure look at MiCA, what opportunities we have, how we can do it in an easy but also understandable way for our investors, because in the end they don't have to understand the technique behind it, but they have to understand the risks and what it means to invest in such an asset. And so yes, I think a big step has been done, and we are open to expand for further instruments, whatever they are.
Nathan.
Yeah, maybe Greta's answer is the answer, no? And back to what we said before, it probably is simply easier for somebody who's already in the financial industry space and regulated to make that next step. And of course, we do anticipate that there's smaller setups or small companies which will go MiCA only first. But yeah, I think it remains to be seen how large that market, that limited, that smaller market is, and how competitively they can behave with medium-sized setups. Yeah, and I think you talked about, Greta, I think you mentioned sort of that user interface, or I think you used a different term, but I think that's an important part to make things easier, accessible to investors. And that it is a user interface. That's actually not very easy to do. And if you have smaller setups, I think they will struggle with that piece, because it's just a bit of tech, a bit of code, and there may be a license. But to actually get that user interface right in the financial industry space is very, very hard. It's not just about setting up a website and an app. It goes far beyond that. Yeah.
Yes, I fully agree. It's the user experience, right? And I mean, I think a good example is PayPal. You know, I mean, everybody knows PayPal, uses it and transfers money via PayPal. But I mean, you don't know what it's behind it and how it's legally done and technically done, but you don't care because it's easy. I type an email and then the next person has 10 euros on his account. And so I think this is a comparison, and this is how it has to be here as well, to invest into financial instruments or in MiCA token. It must be easy. It must be easy, and it must be understandable.
Maybe a little follow-up question, mainly to Nathan and Greta, because you are pioneers in your own respect. Greta represents a crowdfunding platform that stepped over to blockchain. Nathan, a digital crypto exchange that is also pioneer in its own respect. What are the biggest challenges that you experienced being one of the first movers, so to say?
Well, very quickly, just slight corrections. We're not, in that sense, a crypto exchange. We are a fully, or will be a fully licensed securities exchange. It's a very subtle difference, but right. I think the tech is still a challenge. It's always the tech and the law, and then again the user experience. I think all three remain challenging. It's fair to say. If anybody tells you that the tech is easy, then they didn't really think this through, or yeah. And if anybody thinks the regulations are easy, then they haven't been through the process, because we got, there's a lot of lawyers involved and a lot of people that are very knowledgeable, but doesn't mean that the regulations or the regulatory part is easy. And then the user experience, whether in our case, our members or users are actually banks and not retail. So I don't want to call ourselves wholesale, but it's sort of that sort of approach. Our customers are banks, but it's the same problem. It's still a user experience problem, and that's not simple. So it's we're constantly trying to sharpen that and learn. Yeah. So all three pieces are hard.
I agree with you, and especially, I mean, sometimes you don't even know what it is legally what you're doing, right? Because you are moving into a new area, and then you have certain definitions legal definitions, let's say, of a financial instrument. For example, a bond under German law is something you issue on paper. So if you now do it on blockchain, it's not a bond anymore. So that's why the German legislator also came up with this new intended law on digital securities, which is a great step ahead, I think. But so before that, we had to say, okay, it's not a bond in the strict sense, it's a bond sui generis. Like the Germans always, if they don't really know what it is, they say it's sui generis. And there, I mean, you have to find your path, and you can't follow somebody's route, but you have to make your own, you know, analogies and come up with ideas. And I think that's the challenging part. But of course, that's also the exciting part. And I have to say that the German legislator, but also the German regulator, the BaFin, they're very open, and they're really, I think, encouraging players like us, or players like moving into the blockchain business to try out things. I mean, we also have this grandfathering license for the crypto custodians, which I think is great. And yes, I think there we are really on the right path.
Maybe Nathan and Michael, do you have a similar experience that the policymakers and legislators are more open maybe than in the past to really cooperate and co-create with the stakeholders in the emerging industry? Is that happening in more cases?
Yeah, I mean, I think law is evolutionary. It sometimes moves at a slower pace than technology and innovation does. But there is the unequivocal truth that crypto is too big to ignore. It was in 2016, 2017, or even before then, 2014 through to 2016, regulators in Europe were saying, okay, fine, it's there, let's put out the warnings and let's treat it the way we want to treat it. We're now in a completely different world, right? Where there is sandboxes, so these safe spaces for co-creation. And where also, if you are in the sandbox, you can say, okay, this part of regulation doesn't work for crypto, because let's face it, the majority of regulation was never designed with crypto in mind. And MiCA really is the first step, if you want, in the sort of lex systematis, or the lex of the system, the law of the system, apologies, tries to go that way. But there's certain concepts which exist on paper in the law, such as PRIPS, the package retail investment product, where there is this fundamental question: is a token that has a packaged investment element to it, is it a PRIP, right? That's something which people can spend a lot of time thinking about, but you need to, as a product manufacturer, if you want to use the PRIPS term, also turn around to the regulator and say, we've got this law, we understand what it's supposed to do, but it doesn't fit the product, so give me clarity. And I think what Greta mentioned about the German regulator, and thankfully this is being recorded, so Hagen will be happy to hear the enthusiasm for the regulator. But I think the key change was that the German regulator, and just very much focused on Germany for the moment, actually said, please send us your product, your token ideas, and we will engage in feedback before we actually go down the licensing route. And that's also, that marks a shift. That's a cultural shift from the them versus us approach to more of, okay, we both understand that we need to, create something that works for both sides. And that I think is quite welcome. And hopefully there'll be more of it.
Now, with this hope of a closer cooperation between industry stakeholders and policymakers, I would like to close our core discussion and open the space to our attendees and participants to ask questions. I think we discussed quite a few specificities of the crypto market and MiCA. So please feel free to pose a question if you have one. And join us in the debate. Looking at the questions, but so far nothing is coming in. I hope I have a correct information.
Maybe we said so much that people need to
that we
digest it first.
people.
Yeah, exactly. Yeah. It was very dense, no? And I think we did hit it on various aspects.
Indeed. But if there is no question, maybe I can, so far, maybe I can add one question that is interesting for me. When I started to delve into crypto, it was exactly around the time when ICOs were booming. And obviously that was when most of the regulators and maybe mainstream media also noticed crypto for the first time. Well, Bitcoin has been there for quite some time, but the ICOs really brought the attention more to the crypto. And in that time, there were some uncanny similarities between crowdfunding and token offerings and ICOs. But then because of the lack of regulation and sometimes even fraud, the ICO market slowly but surely is dying down if it hasn't died out already. Because MiCA regulates and enables the option of token offerings, obviously of the crypto tokens that are not financial assets. Do you think we can maybe see a revival of that crypto type of crowdfunding? I will ask Nathan.
Right, kind of goes back to that question of competing interests, no investor protection and all that. And I just think that I almost want to call it fight is just not clear yet. It's just too early for us to know whether that will be the case or work out as a crowdfunding tool or not. I think there's going to be it's all an edge case from either side. Yeah, I don't have an opinion. Maybe my only opinion is that it's too early to say, but maybe Greta and Michael, yeah.
Michael, what do you think?
Well, I mean, you know, there are two new channels, right, that effectively are available. They're both coming online. This is what we were saying before. It's I would expect there to be an uptake, certainly because you know the fundamental aspect of you're creating the right opportunity, you're creating the right framework to generate liquidity, right? So increased tradability goes with liquidity, goes with more people coming to the market, but it will be done in a more sustainable fashion, or so the hope, right? That you won't have the some of the bad practices that have been in the past. I think for the crowdfunding space, the next 2 years are going to be transformative. One, because we've got regulation that we discussed that's coming online by 2022, full operation of the crowdfunding service provider regulation, and ultimately the shift in where some of those players may have previously sat, those wanting to continue to access the European market. So, you know, the next 2 years are going to be very, very busy if you're in this space or looking to get into this space. And it will be exciting. Hopefully that answers some part of your question.
Thank you so much for answer. We actually have a question coming in for Greta. And the question is, which part of the distribution marketing to retail investors in a real estate crowdfunding is heavily affected by tokenization on your platform?
Okay, yeah, thank you for the question. I think it's the whole investment product we offer. So we, as I said, we started with subordinated loans, but then shortly thereafter shifted to bonds. So we basically have an SPV that is financing a project developer or a building that is bought by the SPV. And this SPV is issuing a financial instrument, a bond, And through this bond, basically the investors invest. And those were in the beginning classical bonds that were the custody was at Clearstream, and you needed to have your depository bank. And so basically it was like a normal bond of any company you have. And that's where what we changed. So this classical bond, we transformed it in security token. So in tokenized bond, so to say. So those bonds are not anymore stored, let's say at Clearstream or in your depository bank, but they are stored on the blockchain. And so basically the whole product we offer is affected through this tokenization, because we can offer the investment product the investor receives on the blockchain, which makes it, as I explained very in the beginning of our panel, faster, easier, cheaper, and also the trading. I mean, you can do, if you want to sell it, then it takes, I don't know, half an hour to settle it. And whereas if you sell your bond and sell it to a third person, it might take a lot longer in case of classical bonds. I hope this answered the question. And maybe just as regard in the prospectus or the offering materials that are approved by the BaFin, of course, there we have to include that those are tokenized bonds, they're stored on the blockchain. There are, of course, certain risks involved with the technology. So we had to adapt all our offering materials, of course, as well, to this new infrastructure.
Yeah, and I think the crucial bit is we're in a much better position than we were even just a couple of years ago. That the understanding of what the DLT specific risks are, both at the regulator but as well as investors, is a lot better. So there is the market practice has evolved. I wouldn't say that you had a I'm not sure I can coin this term, I'm sure someone else has, but tokenization to distribute model, right? Similar to originate to distribute, which we've moved away from the ICO 1.0 to a much more stable environment with a better understanding. And that again should drive liquidity, right? And if you can trade it, you've got liquidity. I think, Nathan, you're probably the best to answer that in terms of tradability and liquidity.
You're very correct. I to your first part, the maturity in the market is just so much higher by all stakeholders, from regulators to lawyers to market participants, and even to the individual investors, and then third parties that are related. So information gathering, which used to be a huge problem. You had to really search and Google and try to find out what was going on behind a token or an ICO or so. And so I do appreciate very much that the entire space has grown up so much, which is really very, very nice, because it was immature until even only 2 years ago. And then you're right, liquidity is driven by maturity in the market, and we're still, I think that was one of the early questions from Ivona, where are we in case of usage and all that? We're still nowhere, but I think all of us here now or in the space now see a clear path driven by increasing market maturity and by increasing regulatory clarity. So it looks very good looking forward, yeah. Also with regard to liquidity, yeah.
I think we have another question, and the question is, why is tokenization of tangible assets like art, real estate, land still not popular? Is this a regulatory problem or some other technical issue? We can see more new coins on the market and more new crypto exchanges, but not so much real assets tokenization. Why is that? That's a very interesting question, sort of fractional ownership type of a question, possibly. So what do you think? Why we didn't see tokenization of tangible assets more often?
maybe I start. I would say it's because we are in, let's say, from a legal point of view, we are in a very traditional thinking of how you have ownership on assets, right? And especially in real estate, I can only speak for Germany, but if you own, let's say, a building, you are then registered in the land registry as owner, and the land registry is very formal, and you have to apply by them through the notary, and then you are who is written in the land registry is the owner. And so if you say, okay, now I want to have a token on the blockchain saying, okay, maybe 1,000 investors are owner of this building, how does it work with this existing system of proving ownership of something? And that is, I think, really the biggest challenge. And that's also why this is our aim, right? To fractionize ownership of real estate. But this is where we have also the difficulties, and why we had to take the step through issuance of financial instruments to make it, let's say, an indirect ownership through an SPV. Because right now, we would love the possibility to say, okay, we have basically a building, and in the land registry there is, let's say, a token registered, and this token can be split to 10,000 investors. That would be for us a true revolution, and maybe it's the next step, but we are not there yet, because it's not just the financial industry and regulation that then needs to be adapted, and we are already there, but that also affects lots of other laws and legal regimes we have in our daily doing. Also in the company laws, for example, and shares of companies, it's not so easy to put this tokenization on top of it. And the same applies to other assets, like, let's say, art. There are very old and very traditional legal definitions of who is an owner and how to prove ownership. And this takes a much wider step to break it free, my opinion.
If I can pick up on the art piece, which is something I've been sort of looking at for a long time in that space. What you also see are extremely practical problems when it comes to the art piece, specifically the tokenization of art. And even if the legal part or the regulatory part, the legal part were to be fully solved, it's a bit easier with art. Then you have massive practical problems which are a bit unforeseen, which is that art, and I'm simplifying this, it's maybe subject of a separate discussion, art that is worth something doesn't look for small parts and tokenization, but it's usually bought in one piece, and it is often bought also maybe or sold or invested in maybe, let's say, 3, 4, 5, 6, 7, 8 pieces or parts of a big piece of art, but not more than that. And as a result, the art that is then has in the past been tokenized was usually art that was not really that valuable. Hence, the only way to finance it was to tokenize it and to sell it to people who didn't see that actually this wasn't a valuable investment. So this is a negative selection bias, which is turns out really very much win-lose. And lose is here the investor who thinks he or she is very happy to be able to buy 100,000th of one piece of art and pay 10 euros, but actually the value is maybe 0 or close to 0. And so it was often a gimmick that didn't correspond to real economic value, and hence it was a losing investment. So tokenizing art is very, very tricky, because the art market is a tricky market. It's not a transparent market. It's not always a liquid market. So we're back to liquidity, Michael. Yes, there's many problems with the tokenization of art that are not technical problems, not legal problems. They're like is it really something? Is it a pain point that really makes sense to solve? And maybe at this moment, no. Yeah, maybe. Yeah.
Yeah, I mean, just the other overarching point that we can't forget, and this is not related to art, but more to real estate, is that obviously a lot of, whilst you can tokenize the assets, unless you have sufficient amount of digitalization with, for example, land registry, that also reduces the speed argument to it, because even if you're tokenizing the front end of the user experience, the back end may still be heavily paper-based, longer timelines to effectively affect the transfer of ownership. And this is something where we see a number of challenges. There are other member states in the European Union that are far better in terms of having digitalized the systems for any type of transaction, where the tokenization aspect really does make an interest. And then, Nathan has also addressed the point. Again, there's certain asset classes that are maybe it's not yet quite right to tokenize them as of yet, but there's a host of other real assets out there that can be tokenized. I think there was also another question that came in.
We have one more question, and that will be the last question because we already surpassed the time. This question is for Greta. Does Exporo then act as the central counterparty to token holders, ensuring KYC and AML? Which blockchain is being used, and are you encountering any regulatory issues in providing secondary market in real estate assets?
Okay, that's not just one question, but I will try to answer it, all of them and as quickly as possible. So yes, we are acting as intermediaries offering financial instruments, and as such, we are obliged to do the KYC and AML check of all our investors. So that's what we do in the onboarding process. But we are not the wallet provider or the custodian of the crypto assets. There we work together with the service provider, but that's nothing really the investor sees, because it's our subcontractors, so to say. They hold the private key and the wallets to the tokens. Which blockchain is used? We are using Ethereum blockchain. However, as I said, the prices are going up, so that's one of our challenges there. What we are thinking about is omnibus accounts, so that we have one account on the Ethereum blockchain and then split it into smaller accounts. And are we encountering any regulatory issues on the secondary market? Well, yes and no. I mean, no, and so far as what we provide is a bulletin board, and that's totally fine. So basically it's like everywhere else, you say, okay, here's a board, you can put your offers, and other investors can say, okay, I buy it to that price, yes or no. What we are not allowed to do is the price finding mechanism. And so that's actually something really interesting also in the view of MiCA that's coming up. How will the secondary market work, right? And will we have something like a stock exchange, but then you probably, to make it profitable, you need a lot of volume? Or do we have more of those bulletin boards, and the issuers always also offer a bulletin board where their tokens can be traded? So that's something which I'm really, I don't know how it will develop, and that's something we will have to see.
Indeed, there is a lot of expectations from MiCA, and we will have to wait to its enactment and implementation to see how it all turns out. Having said that, I would like to thank the panelists, Greta, Michael, and Nathan, and also Hagen, who had to leave earlier, for their contribution. I think it was a fascinating debate, and I also want to thank the participants, attendees that stayed with us throughout the whole session. I hope it created added value for you and insights that you did not have before. And I also, in this way, want to invite you for the third day of 9th CrowdCon, which will be focused on a very core crowdfunding topic, and that's ECSP. We have also very interesting panelists, and I believe the discussion will be as fascinating as today. So please register also for tomorrow. Thank you again to the panelists and to the attendees, and I wish you still a very nice day. Thank you.
Thank you.